Away we go. Welcome
All
back.
right. Welcome back. And oh shoot, we don't have any backdrops.
Oh,
Well, okay, here. We'll work it out throughout the call.
yes.
Okay.
So welcome back, episode 3, Squirrels of Spark Street. I think Black Squirrels of Spark Street. There's a new pandemic in Ottawa with the black squirrels taking over the gray squirrels and just mistreating them. It's like reverse of Black Lives Matters or something. It's like the gray squirrels. We need to start a campaign. The gray squirrels.
The black squirrels aren't the ones that are the annoying ones, though. Have you ever seen the red squirrels? I think the red is a good theme for today because we're kind of going to talk about some red.
Okay. Makes
So
sense.
I think it's the red squirrels.
Okay.
The annoying red squirrels are taking over the world. All right, what do you want to talk about? So I've got a couple of things. What do you want to?
First of all, I got my background for today.
Oh my gosh, that's way too annoying.
I know, it's super annoying. Sort of like the market. It's like all these. I mean, that's just speaking.
Okay. Yeah. Okay.
It's super annoying. Is it too annoying?
Yeah, it's really annoying.
Okay, let me choose something else.
I don't even. Yeah.
This one's
Everyone thinks those are your real cars, by the way.
Yeah. By the way, these will be my cars when everything plays out the way I think it's going to play out.
Okay.
Actually, no.
Anyway,
I couldn't even afford the front end of one of those cars. All right, episode 3. So a couple things. It's been a couple of weeks since we had an episode, and that's because we've been on vacation. But what's interesting, I mean, I'll start off with my take on the market right now is, and I think I mentioned this to you, Scott, yesterday. It's like, it feels like everybody's starting to catch on that there could be something wrong, that there could be a possibility that the market is overvalued. And if I have this feeling that things are like teetering on the edge. Today we're up 0.2 on the NASDAQ, 0.1 on the S&P, and 0.4 on the Dow. And everybody's like not sure what's going to happen. And again, for me, my position right now, one of the things I've changed is I used to be really, really impatient. Scott knows I've kind of calmed that down. I have a pretty balanced portfolio right now. And I have just basically 6 positions that I'm in right now. And I don't think I've had a negative day in over a week. Like overall, my portfolio every day is not blowing the doors off of anything, but it's not negative. It's sort of just a little bit positive every day. And it's because of sort of the yin and yang between silver and my shorts on the indexes and my shorts on real estate. Yeah.
Okay, so it's interesting. So we didn't talk about this before, but I think the thing I want to highlight, and I want to go into a little bit of an AGQ kind of. I want to make myself feel a little bit better, so I want to talk about something.
Yeah.
That's what I like to do. And give a little bit of like, okay, this is what I see happening now, and where we're gonna go. But yeah, I want to talk about volatility as well, and a piece that I found last night hunting through the interweaves. So I'll and maybe okay, what the volatility means to maybe some interesting stock plays.
Okay. By the way, before you get into that, I do want to kind of do like a little promo for E-Trade, which is one of the original trading platforms for us. They've got this really cool Power E-Trade interface that I've been using this week. It's my first week. I would suggest anybody watching, all 3 of you, if you are using E-Trade, go check it out. It's really cool, and you can fully customize your view. You can look at the things you want to look at. One of the things that's kind of really surprising to me right now that I'm watching is the amount of volume, by the way, on SQQ.
Oh, what? I was gonna actually look at that. What is it?
Almost 23 million today.
23 million.
It's
and
insane.
this is like not end of day.
Well, think about it. It's also an ETF. It's an ETF shorting the NASDAQ. And there's 23 million, the trades on it, 23 million. SDAO has 3.3 million. Hibbs is pretty quiet, only 300,000, 328,000. AGQ has 2.1 million.
That's high for AGQ.
Yeah.
Cool. All right. Can I show you my homework?
Yep. I want to see it.
Okay. So let me, I'll share my screen here. Just a sec. All right. Can you see that?
Yep.
Okay, here we go. Let me go to the beginning. Okay, so what I did, I'll just get you off the screen. So what I did was I wanted to take a picture of, this is what made me feel kind of bad today is a few days of bad news for AGQ, right? Kind of like hitting the top and then going down. And one of the things that I've read about recently is like the importance of having a following trigger based off of peak. And I think that if I had actually built that into my trading platform, so I use Questrade, and Questrade allows you to do that, and it's called a trailing order. And what it would do is it would say if the market went up here, and you could say 15% off the top, you can execute a certain number of trades, which is a really good thing because it protects you against yourself. And what I've kind of seen happen here with AGQ is a lot of dips that have happened with high trading, kind of what you were saying earlier. And I call these the boys. So the boys are the industrial shorts. The boys are like JP Morgan, the industrial traders. And one of the things that lately you sent me this link to an article about Scotiabank being involved in this manipulation stuff too, which is kind of interesting as well. I don't really think that I don't really think you'll see much about the big guys like JP Morgan because they're New York based. That would be a big slam against New York stock trading from the manipulation side of it. But anyway, so what I wanted to kind of show here is a little bit about the history of what I've seen with AGQ. So
yeah,
so the AGQ story kind of goes like this for me. So if you take a look back at 2009 and 2010, this is kind of the profile of what it was during that period. And that was around when the Lehman fiasco happened and the original crash. That was just after like the 2008 period. And during this period, this is when AGQ and silver was doing okay, but then there was a bit of a spike. Now, in the same kind of period that we're in right now, August to 2009 to where we are now, that year kind of looks the same as the year leading up to 2010. Arguably, the period it looks a little bit flat. Interestingly enough, there's a big dip here and there's a big dip here, and then it kind of goes up from there. Yeah. So I took a look at the period over the last few weeks and wanted to try and find something similar, which is right after this August 2010 period in like 10 years ago. And interestingly enough, there's a big jump, and then there's these dips. After this point, this is the one that I like to believe in, is where the ratio of gold and silver come to more reality. And when that happened, this is what takes place in the 2011 period. And this is when it went up. And I'm certainly not saying that that's what we're doing now, but I am saying that the dip happened here, and then it just basically took off, and there was no kind of looking back. So it's interesting. I'm wondering whether the drops that were happening here had something to do with the industrial shorts as well, kind of holding it back. Because if you kind of look back on these big drops, these are big industrial plays. So anyway, I thought it would be kind of interesting.
So let me summarize. So your bet, what you're betting on, is that AGQ silver is going to, after these little dips, is going to spike up.
Yeah, and I think that a lot of it has to do with obviously where the markets are going. And so I kind of wanted to go into the next kind of phase of what I was thinking about, which is.
So what's your sell price set at right now? Remember how?
Well, good question. So I would say that, and I've kind of highlighted that to you, I would say that I would get out of a good portion of my silver holdings, because I'm mainly in ETFs for silver. I would get out of that point in an area around where I would say silver is in the 40 to 45 range, which I would assume would put AGQ around the 70 range. So that's right now. What are we sitting at? Right now we're sitting at 56. So I'm not far from target. And if you take a look at a few weeks ago, it was sitting at like 65. So we're not too far away from that. Anyway, what would cause that to happen? Well, obviously there's this relationship between gold and silver, and when gold goes up, obviously silver typically follows, except for the whole manipulation. But we've kind of ruled out the fact that I don't think as much manipulation is happening anymore. So you see a lot of increased pressure on the stock. So this past week, this is one thing to kind of highlight. Big news on gold, and I would say uncertainty. So when Berkshire Hathaway, when they snap up almost 21 million shares of Barrick Gold, which is one of the largest gold miners in the world, and I mean, Berkshire Hathaway is really, I mean, they were not big gold. They were not hungry for gold in the past. So Warren Buffett, he basically was saying, like, you always stay away from gold. It's really interesting that they've driven this hard towards that play. So I did a little bit of reading last night, and did some research on the Buffett indicator. And I hadn't heard anything about this before. Probably people that are watching this, or some people that are more into the market, know about the Buffett indicator. But what it is an indicator which analyzes the bubble. So analyzes how big a bubble we're sitting on here. And it's the way that it's calculated, and he uses this as an indicator of market instability and market uncertainty. And the way that he analyzes it is, it's the Wilshire 5000 index, which is basically, the way that I understand it, is it's the total value of the market. It's the total value of the stock market divided by the annual US GDP. So it's an index. So I kind of looked at it and kind of saw, like, holy crap, like, and I didn't go back as far as like it started for the Wilshire, but you can see pretty much now the Wilshire's at its highest point. It just came back. The V just came back from where it was in March, and we've already blown past it. And then look at the GDP, and it's interesting that we've had this GDP dip, obviously because of Corona. So if you divide this graph by the bottom graph, what you basically get is this. So it's a so if you look back in the internet bubble, and some of us were around during that period, and some of us were actually investing in that period. And actually during that period, I had a lot of invested in QQQ. So I have a good memory of how the NASDAQ screwed me during that period. But if I had stuck with it, obviously, I think I would have been in great shape these days. But this is how the indicator works. In anything around zero is basically stating that the total value of the market pretty much equals the GDP. Yep. Where we are today is at it's actually higher than this. I think it's actually 70% today, but it's at a point where it's 1.7. So and at that point, we would basically say that the whole market is way highly overvalued.
Yep.
Big surprise, right?
Big surprise.
So I and it's really cool actually to see it where it could drop here at the bottom of the financial crisis around 2008. That has the potential of blowing up in our face. So yeah, this is basically what this guy Tom Assay wrote, that the market cap on all the US stocks equal annual GDP. That means that it's around 1, and you're fundamentally overvalued when the ratio is 1.3 or more.
Yeah.
So look where we are today, like 1.7. So it's crazy overvalued.
Yeah, I mean.
So.
Yeah.
So my last real point on this is I've been watching a couple of stock plays around volatility. Mm-hmm. So it's interesting on the Bloomberg and Fox and the financial channels. They always are quoting a VIX index and kind of where the VIX is right now. Yes. And it's very cool to see that the VIX in around the March timeframe was around like 70 and 80. We're sitting currently at $22. Like that is one play. Oops, sorry. Another play is ProShares, which is the same company as AGQ, is sitting at 20 with I would say a higher upside. The neat part about that is, as you can see where we are right now, it's at the lowest point for this volatility index.
Yeah. And
has what I think we started seeing it today, where it started ticking up. I don't know what it's at today at right now, but volatility I think is at an all-time high right now, and that's kind of where this ETF goes is around volatility. Anyway, that's kind of what I wanted to highlight. Yeah, I thought it was kind of cool.
So the message for today, because we've been working on trying not to make this overly long, these episodes.
Get out!
The message for today is go have a look. First of all, have a look at what you want to do if especially you're in some of these incredibly overvalued technology shares. I think people have all gone there because they're like, oh, well, technology will be fine through coronavirus, which is, good. And it's been obviously an incredible play. But I would suggest that, especially if you've done really, really well, that you go have a look at what your options are. I mean, obviously, Scott and I have been talking about this probably for a little while. Maybe we were a little early with it. We clearly were. Timing is a very difficult thing. But to me, it's like the data the at one point I heard somebody talking about how retail home sales, oh, it's just blowing up. And I agree. Like I was in Nail for a really long time and in and out of Nail, which is a ETF that is essentially following the housing boom as people are building all the supplies and everything. But what is standing out to me too now is start looking at the default rates on mortgages in the US. Some states are higher than others. But all these indicators, along with GDP, along with earnings, for most companies, there's some that are really, really big winners. But most companies are starting to get into major layoffs now, which are going to affect people. There is no additional $600 every week. Like there's so many things right now that are pointing at a correction. And so be careful and have a look at where you can put your money to be safe. Scott and I have a play. I'll tell you what my sell is for Hibbs, which is kind of funny. Hibbs is a short on the S&P. It's $5.79 today. I bought it at like $5.90 something, close to $6. So little negative on it. And my sell price that I have for it is $71. That's my sell.
That's when you retire.
Not quite.
That's when you get to buy the other half of the car.
Yeah, that's when I get to buy the seats in the back end of the car.
Yeah.
But so yeah, that's thanks, Scott. That was really cool. You've definitely convinced me, and I'm in this with you with silver. And it's been I've already taken some profit out of silver, which is cool.
You were smart about it.
Yeah, I don't know. I had this perfect situation happen. It doesn't happen very often, but I did really well. And
was that 2 weeks ago when you like picked the top and then it?
Yeah, I picked the top and it dropped 23%. Yeah.
And that was when my indicator should have told me get out.
And then I actually bought at the end of that day. So when it dropped 23%, I bought it again.
Yeah,
so like in and out. And if you can find ways to do that, and I think that's one of the reasons why I've reduced the number of positions that I'm in. Like for me personally, I just don't have the time to follow much more than 5 or 6 is kind of at my point right now the limit of what I want to kind of keep my eye on. I wish I had more time to do it, but that's it for me right now.
Are you kind of saying like you go like a small number so that you can day trade them? Is that kind of what you're getting?
It's not that I was telling you this week. I'm not really like day trading as often as I used to. Like I used to do more transactions, and it was okay. Like I did pretty well. I would say that there's some that I want to day trade and there's some that I don't. AGQ is one that I watch. It's one that I'm interested in day trading. Maybe not every day, but it's definitely one that has the volatility. Like look at it, even within one day, the volatility it has. It's incredible.
Yeah.
So yeah, that's it from us this week, and we'll see you guys next week.
Awesome. Have a good weekend.
Bye.
Bye.